Live streaming is on.
All right. Good afternoon, everybody. Event Trader here, Gavin McGuire, and just going to be talking here. But before with Brandon, options trader Brandon Mars, of course. But before we get into that, just noting Brett did jump in on a short in the S&P here at 47.97, and we are getting a little bit of a rollover. So, we usually start off with the discussion about the markets here, and that's exactly what we're going to do at this juncture as we break back below the 4,800 level. So, Brandon, we'll ask you about the broader markets overall, but this price action this afternoon, any thoughts on that?
Yeah, interesting timing, I guess, here. I mean, yeah, it's been pretty strong, obviously pretty nice climb off the bottom here and, hit that key level on the 4,800 there. And, yeah, I don't know. I guess the market makers needed a little something to do as we start the new year. So a little bit of games, I guess, as we get to a key level. I guess hopefully we don't see one of those moves that we saw around the holidays there where all of a sudden our screens just lit up red and the markets just took a free fall for a couple percent or whatever it was. But yeah, I mean, they're kind of trying to form a wick here as I'm talking. So I guess we're kind of at a critical point here for the afternoon of whether we'll see some profit taking or climb back higher.
Yeah, yeah. I mean, that is the key. I was kind of surprised that we climbed as much as we did. Let's kind of peel back the onion here a little bit, Brandon, and just talk about some of the recent market activity. It's been a couple weeks since we've had our discussions. So, in general, what's your thoughts on the market going into 2024? And obviously, we had that nice little end of the year rally going on there, and big melt up with portfolio managers chasing. Started off the year a little bit shaky, and now we're starting to see, following yesterday and up until a couple minutes ago today, a little bit of a bounce back in the market. So, how are you approaching the start of 2024? I'm going to grab the charts too as well while we're discussing things.
Yes, I mean, I kind of came in with a little bias to the call side just for the last couple of days of the Santa Claus rally. It seems as though that rally missed the memo and maybe decided to have the rally yesterday and this morning. And I guess like we were just saying, we'll see if it continues this afternoon. But I think that little pullback that we had at the beginning of the year was probably pretty healthy. Right. I mean, we had a pretty nice run in 2023, probably just a little bit of profit taking. Yeah, I've seen some notes from you, and I've put a couple things out there myself. I'd say a little bit of damage done to the charts, but I don't think that they're too bad. Nothing that's making me really hit the panic button. So
Yeah, in the grander scope of things, going back to the Fed day, we're just pretty much at the lower end of that range, right?
Yeah, exactly. So, we didn't get any sort of big 10, 20% pullback or anything. And, what was the NASDAQ up like 40 something percent last year? So, if it pulls back a couple percent with some people taking some profit, I don't think there's anything too nefarious there. So, still kind of leaning towards the call side as we head into the year, and of course going to keep an eye on some earnings and see where those take us. But yeah, as long as there's not such a major breakdown in the charts across the board, I'll probably continue to lean towards the call side.
Okay, now you have been a little quiet today. No trades that I'm aware of, right? I know you got your Tesla calls still out there in your Lulu, and we'll get into that in a second. And you had HD on your radar, but nothing else outside of those three names, correct?
Yeah, that's correct. And unfortunately, it was a little quiet this morning because my calls coming into today were about as incorrect as you could have asked for with this climb. So was kind of unfortunately behind the scenes, kind of analyzing those a little bit, and unfortunately had some movements against me quite quickly, and has kind of put me a little bit on my back foot. I'm not going to lie.
No, it happens. So I guess the question that people want to ask is, what's your process when you do have that, because I mean, anybody who says that they don't is just flat out lying, right? We all run, or else you're Lenny Dykstra, one or the other two. But what's your, and we'll get into the individual names here, but what's your general process when you kind of feel like you've got a few names that are trades going against you and you just don't feel like you have your finger on the pulse?
I got the box of Kleenexes beside me, so I just grab a couple of those and take a deep breath and so today's a perfect example of just kind of being quiet. You could kind of see the charts this morning. You could see the bounce. It was just my watch list this morning started all red. And it quickly just went like one more stock green, second stock green, third one green. And you could kind of tell that there was going to be some good opportunities. And I just frankly had to tell myself, manage what you have and figure out what you have first. And you're going to not have, unfortunately, most likely the best day because you're going to miss some opportunities, but just don't go and buy, a bunch of calls. I've talked about this before.
The revenge trade.
Yeah, the revenge trade, and just, you're not thinking, I don't know, completely clear-headed, I think. And it's great if you do revenge trade and you get a day like today where all of a sudden everything did start to climb and you do make up for those losses. But more times than not, you end up with, double the amount of losers. And, on the options front, that can be quite painful on a Friday afternoon when the bell hits 4:00. So, for me, I got to kind of tell myself mentally, like, it's frustrating. It's like, all right, I'm looking at one of my watch lists here, like, Google's now up 1.5%. I think it made like a 3 or 4 point climb. That's a nice options trade if you bought in at the beginning of the day. And I got to kind of just tell myself, you missed those, Brandon, and just kind of make sure that you clean your head out mentally, and maybe your account heading into tomorrow, and just to kind of be a little better prepared and have some better picks, frankly.
Okay, so let's take a look at some of the picks that you did have out there. Tesla, you brought this one yesterday, the Friday 245 calls. We could see that's slipped down below the 50-day moving average at the moment, down about 2.69%. What's your thoughts on Tesla here, Brandon? Are you planning on sticking around in that, or where do you see this going from here?
Yeah, just one more point to what's the plan, and to your question on sticking around. They kind of go hand in hand. Unfortunately for me, in a case like the Tesla and the LULU that we'll talk about in a second, those things moved down really quick this morning. And just by the time you almost even figure out what's going on or whether you still like to trade or not, in the options world, those just moved against me so quick. So I think by default, yes, I will be sticking with them, because it just got to a point where it was just almost not worth selling the contract, unfortunately. And, that's one of the risks of taking options overnight, unfortunately. So yeah, Tesla. So Tesla just stemmed from yesterday. It was actually showing a little bit of weakness compared to some of the other big tech. And it just seemed like it might be like an afternoon catch-up candidate. And I actually saw a little bit of an ascending triangle on the intraday chart, and jumped into a call real quick, and actually ended up getting the breakout that I was looking for. It just wasn't it wasn't a huge return because it was Tesla options on a Monday, and you kind of need a decent little move to hit a double, let's say. But it was definitely up, I think, 20%ish or so, and I saw some activity at the end of the day that I liked. It looked like it was kind of, it almost looked like they were starting to build a position for the next day. And, we had that good strength in the market yesterday, and the Tesla candle was looking, pretty clean, pretty bullish, and thought we might get some continued momentum. And I tell you, obviously I was watching it real time this morning. I didn't see any news, and I apologize if I missed an obvious article or anything about Tesla, but this morning some really aggressive selling came in. Kind of some really nasty chunks were sold off on some pretty decent volume for Tesla. So yeah, I don't know if there was something that I missed, or it could have just been the fact that it was playing around that 50-day moving average right there. So some of the algorithms I think might have just kicked in, but it was kind of aggressive and moved quickly. And unfortunately, would have been nice if it was aggressive buying, but
Yeah,
that happens.
I didn't see any real news. I mean, there was a few things people were trying to put to the narrative. That Musk using illegal drugs seemed to be getting a lot of play, and it was coming from the Wall Street Journal, so I guess a little bit more credibility. Um, Personally, it sounds to me like a bit of a hit piece on Musk. Uh, I read the whole book on Walter Isaacson's book, and he just doesn't strike me as the type that um, does drugs. And I know he had to get drug tested after he smoked marijuana on the air with Joe Rogan. So I think that just kind of helped rattle the stock a little bit. And then that 50-day moving average came into play, like you were talking about. So once that was set off, I know some people were talking about an electric article that was out about criticism on their new Cybertruck. Again, I don't think that really played too much into anything on that front. So, like you said, pretty sure that's just a break of the 50-day moving average and a little. And at the end of the day, what, it's down 2% after being up 50% over the last 2 months or so.
Yeah, exactly. So yeah, no, I would agree. I think some of those, Tesla does have quite a bit of news, and I don't know. I guess at the end of the day, all the things that Elon Musk has tweeted and said, him smoking a little marijuana is probably pretty mild, I would say. So yeah, I think just kind of some algorithms kicked in, unfortunately.
Okay. All right. So Tesla, that was one name we had. Then Lululemon, which came out with some decent guidance yesterday. I mean, they raised it. It was in line with expectations. So that's part of it. Was a little bit of sell the news, I guess you could say, considering the run up that this stock had going into the new year. I mean, we were trading down around 360. It rallied all the way up to that 510 area over that the final 9 weeks of the year. So giving some of that back. But what was it in Lulu that you're seeing that piqued your interest? And what is it
Yes.
that you're seeing now that has you either concerned or sticking around?
Yeah, so Lulu, yesterday, I have to admit, I didn't actually see the guidance update until I started looking at the chart eventually, and then I realized that there was some news out there, so piqued my interest even more, and made a nice move off of the lows of the day around like the 10 o'clock hour yesterday morning, and kind of started to build a little bit of a flag pattern, and then actually almost created like a rounded bottom, almost like a cup and handle formation. So the charts just caught my attention, and then what I was doing was I was checking on the daily chart, because I didn't actually have that one on my my radar entering into the day, and I saw a nice hammer candle forming, really off of the lower Bollinger Band. And if you look at that thing, it's been in a little bit of a pullback from the end of the year. And, for me, it started to kind of look like a pullback long candidate. Again, strong chart there. Definitely a little bit of profit taking heading into the new year. People probably wanting to take some off the table, but they didn't want to, have it happen in 2023 tax year. So it seemed like a little bit of a pullback long candidate, had that nice hammer candle, bounced right off the 50 RSI, which is kind of a setup that I personally have found to be pretty intriguing on a really strong chart. And, you got the MACD that's kind of, it's sloping in the wrong direction, but the histogram's kind of reaching a low point. And if that's kind of where you catch those, strong uptrend stocks, can really catch a nice trend back on the upside. So, Yeah, it was actually up like 30-40% on that one, and just saw the candle formation yesterday and thought we might have had a little bit more follow through to the market strength yesterday. And yeah, again, unfortunately, this one just opened in the complete opposite direction that I wanted. So just again, kind of stuck in that one, and just keeping an eye on it. There's a little bit of interesting volume here or there that's coming in the afternoon, and I don't know. At this point, maybe I'm hoping that Tiger Woods comes out and says, "Yeah, I left Nike because I'm done with golf, and I'm going to be a worldwide yoga ambassador for LULU or something." So.
Why not? Why not? Right. Well, we'll keep an eye out on that. Obviously, you still have a few days to go. Is there any levels that you're just going to throw the towel in for Tesla or Lulu?
Yeah, I mean, unfortunately, at this point, with where the options are, I'm gonna ride those out. Unfortunately, so I
Yeah,
gotta just kind of hope
take
for the
your lumps.
best, and hope that's why Tiger left Nike.
Okay. One that you had on the radar you didn't fire on, Home Depot, ticker symbol HD, of course. Another one that's straddling the 20-day moving average here, slipped down to the lower end of its Bollinger Band, there around 347 level. So just kind of watching this. I'm sorry, I was looking at the 5-minute chart there on the Bollinger Band, but straddling the 20-day, riding that high up to 348. What is it that you're looking for from Home Depot that would get you interested in pulling the trigger?
Yeah, and part of the reason I threw this one on the radar was I thought there was some interesting learning stuff from a chart perspective too. So you're looking at and I put some of this stuff in my morning notes too, in case anybody wanted to reference that. So looking at the daily chart, again, like most stocks, had a little bit of a pullback there. Dipped down below that 20-day, and then did have a pretty nice reclaim of it the last couple of days, and really closed right around the 348 area yesterday. And what I found intriguing about that was if you look from basically mid-December through about the end of the year, had a little bit of a descending triangle, not a huge one, but a 7 or 8 day descending triangle over that period. And the descending triangle over those days were all inside days too. So broke down below that. So it's sitting right along an area that's going to be, probably some decent resistance to it. Got that mother bar from all of those inside days, and just that I think sets up a possibility that if it starts to line up and build around that 348 area, if you start to get that momentum, the 350 psychological level would be pretty close for a potential quick day trade, and then I think even testing the highs. So that's what I was seeing on a chart perspective. And then, obviously with, I'd say yields falling, but they've been kind of bouncing back to that 4% level. But, Home Depot is always one of those names that whenever yields fall, they tend to get a little bit of a boost just because of the housing market. So then today, actually, if you look, looking intraday, so you got that 348 area, made a nice move up to it to about the lunchtime, and kind of consolidated right around that area throughout most of lunch, and made a little bit of a head fake breakout, and it's kind of sitting right back there right now too. So, again, the longer that it kind of sits there and coils around that particular level, the more likely, it would be to, make a potential breakout higher. So, again, it's as I'm talking here, I mean, the last 5-minute candle was, almost double the volume, not huge, but about double the volume of what it usually sees. So, I think all of a sudden there might be some potential interest there. And, I probably won't fire on it. Again, just kind of keeping the head clear for now and really looking for that really, really solid setup. But, sitting at 348.5 right now, if it is going to continue to move higher, which it is as I'm saying this. A quick move to the 350 area, if you bought like the 350 calls that expired on Friday, would, probably create a nice little day trade for you into the close.
All right. Any other names that kind of on your radar here, Brandon, that you're just following?
Yeah, I mean, of course, NVIDIA. Shame on me, I guess, for not just buying calls out of the gate yesterday and letting those ride. So, unfortunately, I missed that
I think
one.
that caught a lot of people flat-footed. Obviously, a lot of excitement around the CES, the CES presentation and some of the new product lines. But yeah, I think a lot of people were just kind of caught watching that run.
Yeah, I kind of wish that breakout didn't happen at 6:30. Well, I guess 9:30 East Coast time on a Monday morning after a holiday shortened week.
Yeah.
So, good for Wall Street for pulling that move. I'll give them credit on that one. But yeah, I mean, been watching that, and I mean, also just kind of too for an overall market sentiment. It had been kind of, and I talked about this in my notes yesterday. I mean, it had been building an ascending triangle on the weekly chart. It was pretty well defined, and had 500 in its sights. And I mean, I was watching it yesterday morning, and usually when you get over a key level like that on a Monday morning, and it's the first test of it, you get a little bit of a retest of that level, and just really just didn't even look back for the most part. So, getting a little bit extended on the Bollinger Band basis at this point, so maybe a little hesitant to chase, but. I got to imagine that that's going to be a pretty good buy the dip candidate for a while here.
Yeah, it's certainly shaping up that way. What about any of the other semiconductor plays off of that? I know you can follow AMD and Qualcomm on the occasion. You looking at any of those for catch-up plays?
Yeah, I've been looking at them. I mean, I kind of put them on the back burner with the NVIDIA at the 500 just for focus purposes. I kind of like trading NVIDIA a little bit more than AMD and Qualcomm. But yeah, I mean, even AMD, it's making that nice move up to the 150 area. A little steep, I would say, over the last couple of days. So I would imagine that it wouldn't just blow right through it. I mean, who knows if this momentum keeps up? But yeah, I mean, keeping an eye on AMD in that 150 level is probably another important thing to watch in the semis.
Okay. Let's see any other names that you wanted to touch upon here?
No, I think let me just check my notes here. No, I think those are the main things. And I mean, other than that, I mean, I am doing my usual and keeping an eye on the big tech names. I mean, they're starting to look again, after a little bit of a pullback, you're starting to see some nice stuff. I mean, talking about Google, and I know they've had some announcements and stuff today, making a nice move over that 140 area. You have to imagine if strength remains in tech, that Google's probably going to start making new highs here as it moves its way above the 140 area. If you look, it's made a nice series of higher lows here since dating back to October. So even through the recent little pullback, I mean, yeah, dipped below the 20-day just a little bit, but continued to make a nice higher low and already retesting that 140 area. So that's probably a pretty good one to keep on the radar too.
What about Apple? That's obviously off to a rocky start. Would you prefer to look at some of the other names?
Yeah, Apple, I haven't traded Apple in so long, but I did put that into my notes a couple times over the last week or so. I mean, yeah, rocky start. And, at first it looked like it was going to be a pretty good candidate for a further breakdown if we got the market weakness. Came right down to that 180 level, was sitting above the 200-day. And I don't think off the top of my head, I don't think any of the other tech stocks have been testing the 200-day like that. I might be off on that, but just off the top of my head. And then I think they had something about their goggles or visor or whatever they're coming out with yesterday, and made a real nice move. But yeah, again, it's got some weakness today. So, if we do get a return to weakness in the market, you'd probably have to lean a little bit towards the put side on that one.
Okay, and last one I'll just ask you on that front, Amazon, AMZN.
Yeah, I mean, Amazon, yeah, some of these have been a little tricky here through some of this volatility. I mean, you look at Amazon and, it was making that nice coiling pattern towards, mid-December through almost the end of the year. And then, it looked like it was creating a triangle, really getting ready for a breakout. And then now it's creating this like pretty defined V pattern. But, again, once again, it's reclaimed some of the moving averages. If I would like this one even more if Tesla can get out of the red, just because they're both in the discretionary category. But yeah, I mean, Amazon, you got to imagine, is probably, again, with market strength, going to maybe start to go test that little triangle it created at the end of the year.
All right. Any other names that we want to discuss here before we move on to our topic of the week?
No, I think we covered it pretty well today.
All right. Let's see. So, our topic of the day, very timely, dogs of the Dow. So, I know we were talking earlier, Brandon. I actually fired on one of these dogs here, Walgreens Boots Alliance, earlier in the week. That's been giving us a nice little return here, nice steady push higher, following after it got beat up on its an announcement about cutting the dividend and earnings. So, let's talk a little bit about the dog of the Dow theory and how you're looking at possibly playing it in your world, Brandon. So let's go through it. Explain to us dogs of the Dow.
Yeah, so just real brief on the theory behind it. So it's basically you're just buying the 10 Dow stocks with the highest dividend yields at the end of December, and you just hold them for the year. That's really the most basic, strategy. Again, it's in theory, it's kind of like a set it and forget it type situation, or mini portfolio, if you will. And the idea would be that these higher yielding stocks would outperform the index over the course of the year. So, for me, personally, again, everybody's kind of got their own market thoughts. I personally don't know where the indexes and stuff are that I'd personally be jumping in to buy a portfolio of 10 stocks right now. That's just me, but kind of wanted to talk about a couple income strategies around the dogs of the Dow that could, potentially boost the yields for this particular strategy.
Okay. So the first one, now, one of the things that I was always of the assumption too is there is a little bit of a January effect with stocks going on here. So I was for dogs of the Dow, not only the highest dividend yielding, but the worst performers. No.
Yes. Yeah, that is correct. Well, I actually, that's a good point you bring up as far as the worst performers, because one of the dogs of the Dow is technically IBM. And I didn't run the numbers, but IBM doesn't necessarily seem like an underperformer to me. Would you agree with that?
Yeah, no, I'd agree with that.
Okay, but yes, you're absolutely correct that the theory would be the dogs of the Dow would be the underperformers from the year before, and hence them underperforming would create the highest yields going into the year, and that's why you would buy them. But you brought up a good point, guy. Literally last night when I was putting this together, I was like, well, IBM, that doesn't seem like an underperformer if you look at the chart.
Yeah. Well, and then as we'll go through these names, the worst performer with the highest dividend yield was Walgreens Boots Alliance, and of course, they just announced that they're cutting their dividend 48%, right? So that dividend yield is going to take a bit of a hit, obviously, on that front.
Yeah, I guess the dogs of the Dow is just kind of, I guess, in a way, a boring strategy, and I guess they threw a couple curveballs at us this year with some of those things.
Oh, for sure, but it has been productive. So, um, as you were saying, there's a few ways that you could play this on the options front, right? Cash secured put idea being one of them. So why don't you tell us a little bit about that?
Yeah, so we've talked about this in a past call, but the cash secured put idea, just as a reminder, is when you write a put option and you simultaneously put aside enough cash to buy the stock if you are assigned. So, usually this is done in a case where you're interested in owning the stock, but you think it could go lower. And writing the put would give you, really a little bit of a portfolio hedge and would also generate some income. So, I guess maybe this little rollover, well, I was going to say rollover in the market, but we are pretty much right back at the highs of the day. So,
Yeah, those rollovers don't last too long right now, right?
yeah. So scratch the rollover. But let's just say you were entering into this year. Obviously we had a little bit of a pullback in the market. We've seen some profit taking. And let's say that you're of the mind frame that you think that the selling is not done short term, but longer term, you are bullish. That would be a particular case that you would, want to look at something like a cash secured put. And, in this particular case, this would, again, to boost income on this particular strategy. So let's say your put was assigned at a lower price. Your yield would be higher because you're going to enter into the stock at a lower price, giving you an overall higher effective yield on it. And then you'd also would have generated some additional income that would enter into your account when you write the put. So that would be really one way that you could generate some additional return on the strategy. And then in conjunction with that, it would be if you were assigned the stock on the put. So again, you would write the put and that put would need to end in the money. And then you would be expected to buy those shares because you wrote the put. Once you own the shares, then you would be entitled to collecting the dividend on the stock. You'd have stock ownership. And then to create even higher return would be to potentially go and sell a covered call. Again, I want to point out that a covered call or, some of these option strategies when you're hedging or writing, again, they're hedges. So they can drag down your performance. So, if you're sitting here and you're like, all right, well, IBM's going to be the biggest winner in the AI world this year. I think it's just going to shoot to the moon. Then, this particular strategy might not make the most sense. And it might make sense to just, go long a call or just buy the shares outright. Again, just kind of throwing out some different ideas for, people with some different takes on the market.
Right. So let's kind of go through some of the dogs of the Dow, then take a look at the charts and see what aligns with some of the theory that you're talking about here. We talked about Walgreens Boots Alliance, WBA. Obviously had that dip down to the 50-day moving average. It's since bounced back, straddling the 20, filling that gap right now. But potential resistance certainly up at that 26 to 27 level. We got the new CEO going on in there, so be curious. That's one of the reasons why I liked it. He seems to be pretty good, a cash maker. So investment dollars like to follow some of the management teams. So Tim Wentworth is a good reason to be buying it. But does this fit into your model for dogs of the Dow? And if so, what are some strike prices that you'd be looking at in it?
Yeah. So, and actually, you bring up make me think of one thing here, just to kind of put an asterisk here on this strategy with using options is some of these, and we've talked about this in past calls too, some of the Dow stocks aren't necessarily the most heavily traded on the options front. So, again, you just got to kind of be mindful of open interest and everything like that, and making sure there's enough liquidity. It's really interesting how some of these Dow stocks are so well known and so huge, yet they're so thinly traded on the options front. But just as a quick example here, so let's say Walgreens, it's sitting there right around its 20-day right now. Let's just say that you think, all right, this little bounce over the last couple of days, it isn't sustainable. It's going to see one more, check back down before we continue higher. One thing that you could do in a case like this is you could look out to next week. And I say next week because next week is the monthly option expiration. So you're just going to find some better volume and liquidity on some of these names. And, let's just say you think it's going to dip back down and, close below the key 25 level next week. What you could do is you could go and you could write the 25 put. And again, you need to set the money aside for a potential assignment of the stock. You could collect a little bit of income along the way. And that way, if we do dip back down below that key 25 level and your put would be assigned, you'd be assigned the shares at $25, or you'd be buying them at $25 versus the $25.43. So again, it would, increase your overall effective yield, would have given you a little bit of income in the process. And then you own the shares at $25 instead of $25.43. So then to kind of, I guess, go full circle with the idea, and, let's just say you wanted to go and generate some more income on the stock. Well, now, like you said, you've got that kind of that resistance there in the 26.5, 27 level. Let's look out to the month of February. Let's say we take those walls of resistance. You're then trading below the 20-day. That would act as resistance too. You could look at the 27.5 call. And the theory there would be that you still want to keep the shares, provide a little bit of a hedge on there. You're going to start collecting the dividend because you now own the shares. You've got the equity appreciation potential if the stock does rise. And you also think that you're pretty well protected with those levels of resistance. You could write the 27.5 covered call. And again, you would generate a little bit more income. There is that potential that the trade could move against you if all of a sudden, that new CEO that you mentioned comes out and he says, hey, this is our plan and Wall Street loves it and it shoots to 28. Well, then you'd need to adjust your trade and that would move against you. But the theory with these would be, it would hit those levels of resistance and eventually your covered call would expire worthless and you'd get to keep that income. And then again, if you wanted to repeat the strategy, you could look out to the March, the April. You can adjust your strike price. Basically at that point, the trade is up to you and how you want to manage it. Or, maybe you just think Rite Aid's coming along and, they're going to wipe out Walgreens and, you want to sell the stock and you want to move on. So again, there's a lot of flexibility and, anytime that you write any of these, you can also go ahead and close them out accordingly if you don't like the idea anymore.
All right, let's take a quick look at some of the other ones then. Verizon, they fall on the list here. Pretty good looking chart here. Wouldn't you say, Brandon? I mean, this has just been kind of sitting around that. Hold on, sorry. It had been consolidating in that 37.50 to 39 range over the last month or so. Now starting to break out. We did get a reversal today. So, what's your thought on Verizon? as a potential play here.
Yeah, that's I will fully admit I did not look at the Verizon chart before this call, and I can't tell you the last time I have, but you almost would, again, kind of like we were just talking about with IBM, you almost wouldn't think of this as a Dow of the dog with that chart. I mean, it's not overly exciting, but it's Verizon. I mean, that's kind of how it's going to move.
Well, if you looked at the monthly, it would be a lot clearer, right? Look at that monthly chart. Long-term downward trend since 2021.
Okay. Yep. I was looking at the daily here on my screen. So yeah, I see it now. Yeah, and I just pulled up the option chain. I don't want to read too much into this, but got some elevated put activity today, which I guess
right?
Yeah, I guess you'd kind of expect that with that little bit of a move down. But barely any call buying on it for the typical numbers, and almost got a put call ratio of almost 1. So again, I'm not going to read too much into it from one day, but just some interesting activity on it as we look at it.
And then we got
I'm sorry.
I was going to move on to 3M there, but if you had anything else to say about Verizon.
No, I mean, I could run through some examples again if you'd like, but
yeah, sure. Give us a few levels. I think basically what I was thinking, Brandon, and we probably should have discussed it beforehand, is I'll just throw out the names that are on here, and you could throw out a couple of levels that you'd be looking at in terms of strike prices.
Okay.
If that makes sense to you.
Yeah, that works for me. Yeah, and I mean, again, too, on kind of the strike prices, I guess it kind of, you got to also ask yourself when you're entering into it is, kind of what's your time frame? When do you think this move's going to happen? Is, Armageddon going to happen this afternoon? And, Verizon's all of a sudden going to be at its 20-day, next week kind of thing? Or do you think it's going to take some time? In the case of Verizon, if I was looking longer term, I'd probably be looking at that, 20-day moving average around the 38 level. And then on the upside, probably keep it simple with 40. So, that makes me think of something else here too. If you think that Verizon is going to dip down and it's going to find support at the 20-day, which is 38.07, and you were to implement a strategy like this, and you were to go into the 38 put, well, in theory, if it found support there, you would never actually be assigned the stock. So just something to be mindful of when you're starting to look at these levels and picking strike prices.
All right, then we got 3M. That's one of the other lists. It's one of the other names. This has had a pretty productive end of the year, that's for sure.
Yeah, that one's kind of interesting, actually. I mean, it's
a lot of stocks have had productive end of the years, I suppose, right?
Yeah, I mean, we got a little bit of a 4 straight inside days here. So, kind of looking at that mother bar, if it breaks that either to the upside or to the downside, if it consolidates like that for a couple more days, it could actually create a decent little move. So, yeah, I mean, again, for 3M, I'd probably be looking at the 110 on the upside and probably keeping an eye on that 20-day around 107 on the downside.
We got Dow as one of the names too. This is recently broken above the 50 and 200, coming back down for a test of that 200-day moving average here.
Yeah, Dow. Geez, I have to admit, I haven't looked at the Dow chart in quite some time either.
Yeah, all right.
Yeah, I mean, that one
it'd be a nice reopening play for China as well, too, right? So,
yeah, that one's showing a little weakness today, isn't it? Down 2%. I mean, geez, if it can't hold that 54 level, you got to imagine. I mean, this one's probably going to find levels, kind of on each point, I would say. I'd think 53 would be there. Actually, I would think on the downside, you'd be looking at that 200-day around 52.75, give or take.
All right. Chevron CVX, the energy patch has been looking rather abysmal the last couple of weeks here. This chart looks a little shaky too. Would this be one you'd probably stick away from? You think there's better candidates out there, Brandon? Or
yeah, I mean, for me, when I'm kind of looking on the options front, I'm usually playing a little bit more on the breakout side than this particular strategy. Again, just kind of sharing ideas, but you would imagine that Chevron would find some decent support around like the 145, 144.5 area. I mean, that was a very long consolidation from, call it November through mid-December. So you'd have to imagine that it would find some pretty good support there. Now, if it broke that would probably send that thing into a pretty nice little downturn, I would think.
all right, and then next one up. This is interesting one. AMZN, obviously, biotech and pharma have been white hot coming out of the gate here. So from my understanding, for the dogs of the Dow, this wouldn't necessarily be on it. But the yield definitely attractive at 3.22%. Probably the best looking chart that we've looked at of any of these, wouldn't you say?
Yeah, I would say so. Real nice candle there yesterday too. Again, you got a stock brushing up against its upper Bollinger Band. Maybe it could use a little bit of consolidation. Getting a little far away from its 20-day, which makes me maybe a little nervous.
Stretched.
Yeah,
What the
just
RSI is in this thing?
oh yeah, it's almost at 80.
Got to be close to almost at 80. Okay, there we go.
Yeah, 74 and change.
Yeah, it's stretched.
Yeah, I mean, that actually, as you bring that up, could be a great example. You like the stock, the sector's been hot, but you think it maybe needs a little bit of a breather. So, let's just use round psychological numbers here. It's at 306. If it came in, I don't know, call it $7 or 7 points, call it a little over 2% pullback. That would seem pretty reasonable and would kind of keep that nice chart and uptrend intact. So if it went down to test that 300 level and you like this stock, this could actually be a perfect example where, you could do the cash secured put idea at the 300 strike to get into a better entry and generate some income while you're waiting for that better entry level.
All right, and then we got Coca-Cola KO.
It's kind of an
chart here.
Right. Yeah, it's kind of an interesting
running up against that 200-day moving average, trying to edge above that here at the moment.
Yeah, almost got a little bit of a triangle here formed on that. I tried trading Coke once for options, and I learned quickly that wasn't the best day trader. So yeah. I don't know how explosive that move might be, but if it breaks out of that consolidation, it should get above that 60 level. You got to imagine it probably have some room to run here a little bit, you'd think.
Yeah. So keep an eye out on that. I'd be curious. There's the reports out about Carrefour kicking back against Pepsi on the prices that they've been charging. I'd be curious if Coca-Cola would see the same thing here. Cisco Systems is another name that falls in under that list there, Brandon. This one coming in to test support at the 200-day moving average.
Yeah, that one's kind of a boring little chart, isn't it, there on Cisco?
Yeah. Well, Cisco tends to be boring for the most part, right?
Yeah, that's true. It's true. Boy, it's got
Key
some
support
okay.
level if you're looking at it on the monthly.
Yeah, I mean, I guess for me, I'd probably be just, again, pretty boring on that and keeping an eye on the 50 level. And, on the downside, if it does make a move down, you got to kind of keep an eye on that consolidation again in the November, December timeframe down in the 48.5 area.
All right, and then finally J&J.
Yeah, this one I guess will probably be interesting based upon UNH earnings coming out this week. So
right, that's on Friday.
Yeah, I mean, healthcare again, that's had a pretty strong chart. Again, it's got not textbook by any means, but almost a little bit of that ascending triangle going on there. So I think the 162.5 level, if I remember on this one, is an area to watch out for. And then obviously I'd say on the downside, if it started to test that 200-day, a little below the 160 level, would be kind of the cautious level on potential further downside.
All right, that's the list of names that we had here, Brandon. So, how about a quick recap on dogs of the Dow then, and we'll just kind of circle back and see if there's anything else we need to touch upon.
Yeah, so I guess last one. Oh yeah, and we talked about IBM. Yeah, no, I mean, I don't think I have anything else to really add. There's just a couple of points here I wanted to point out from the notes I sent over to you. So, I hesitate to put an exact number out there on some of these things just because there's a lot of factors that come into play, such as, if you are eventually assigned the stock, what strikes you choose, what date you choose, how much premium is collected. But if some of these ideas were implemented, you could actually be talking about yields, I'd say, approaching close to 10%. So again, I'm not I'm looking at NVDA more than being an income investor, but a 10% yield on something with also the potential for the stock appreciation if the dogs of the Dow theory became correct and it did outperform. You could be looking at some pretty nice little returns on this particular strategy. And then the last thing I would point out is, one of the things, or the reasons that you would implement this particular strategy on the dogs of the Dow is people do it for yield. And you just got to keep in mind that, if you're long or you're short options, you're not going to be entitled to the dividends. So you would only get those dividends if your option strategies ultimately ended up in the stock ownership.
All right, good stuff there, Brandon. Just keeping an eye too on the broader market here. Back up that 47.93 area. Still looking a little heavy. Can't get any buyers above 4,800. So be curious to see if they try to sell us off going into the close here. You got any thoughts on that?
Yeah, and I'm also looking here on the NQs. Maybe not textbook, but almost looks a little bit like a double top pattern. So definitely keeping an eye on that 16,850 level. But again, as I'm saying that, we're getting some wicks forming on the candles as I say that. But yeah, no, I would agree with you. It is feeling a little heavy.
So let me ask you about the wicks real quick too, just because you do mention them a lot. Your take when you see wicks like this? What's happening in the stock, in your opinion, in that matter?
Yeah. So, again, I would, obviously kind of for me depend a little bit on the size and the scale of the wick. The lower wick obviously would potentially show buyers. For what gets me interested is, if you start to see a lot of them over and over and over, well, eventually that usually starts to add up to the idea that there are buyers there and there's becoming more and more buyers there. So, then I kind of try to look for what really gets me interested is when I see like the long wick with the high volume, almost sort of like a reversal candle or, some sort of like a capitulation where you get that last big surge of the volume. And, that's kind of where that we've found either our bottom or our top. The ones that are occurring right now shows some signs of some buyers, but doesn't have me, running for an entry order right now. I just don't think that those were necessarily strong enough. So, and again, as I say that, we continue to tick down. So I'll start to look at those wicks. And, again, we get to points sometimes if you watch charts enough where I watch the 5-minute candles predominantly, where all of a sudden you might start to see, 5, 6, 7 of them are in a row that are starting to see that wick. And, again, if you get enough of those in a row, it usually starts to mean that we're trying to get through the bottoming process. So that's really, what I keep an eye on. And, at this point, I want to keep an eye on that, potential, double top. Take a look at that area where, the NQs in particular starting to approach the 50-day on an intraday basis. And this is, again, on my 5-minute candle. So, if we got down to there and all of a sudden I saw this big wick and the volume really came in, that's what would kind of intrigue me that we might continue to the upside for the rest of the afternoon versus, a further rollover.
All right. Yeah, we're slowly bleeding down here, down to 16,816 in the NASDAQ. So, all right. Well, Brandon, as per usual, thank you so much for joining us here. Always good to hear your thoughts on everything. And obviously, we'll be keeping an eye out on the page. You got any other parting shots for us?
No, I think that's about it. Yeah, keep an eye here, and I'll get that box of Kleenex for my Tesla and Lulu, and try and clear the head.
Yeah, I got trucked by trying to short a NASDAQ earlier, so it definitely happens. Definitely happens.
Happens to the best of us.
All right. Well, we'll be chatting soon enough, Brandon, and you take care of yourself and talk to you next Tuesday.
All right. Thanks, Gavin. Appreciate it.
All right. We're just going to be shutting down audio temporarily here. We'll have it back up in a couple minutes.